In this video, I'll guide you through how to write off bad debts in Xero. By the end, you'll know exactly how to turn an unpaid invoice into a proper bad debt so your accounts stay accurate and up to date. We'll move through the process step by step inside Xero, and I'll explain what each action is doing in your books as we go. First, open your web browser and go to Xero's website. Log into your Xero account the way you normally do. Make sure you're in the correct organization if you manage more than one business, because the bad debt write-off will apply only to the organization you have selected. Once you're in Xero, look to the main navigation bar and click on the sales option. This is where Xero keeps all of your customer invoices, credit notes, and related reports. We're going to start from here because writing off a bad debt is essentially creating a credit note that cancels all or part of an unpaid invoice. After clicking Sales, choose Sales Overview. This gives you a summary of your outstanding invoices, paid invoices, and other sales activity. It's a useful place to work from when you're handling things like bad debts, because you can see at a glance which invoices are overdue or unlikely to be collected. From the Sales Overview screen, find the New button or New drop-down at the top right area of the page. Click this to open the list of new sales documents you can create. Instead of creating a new invoice, we're going to use this menu to set up a credit note that will write off the bad debt. In the drop-down menu, click Credit Note. A credit note in Xero is used to reduce or cancel the amount a customer owes you. When you're writing off a bad debt, the credit note is the tool that reverses the income and moves the amount into your bad debt expense account. You'll now see a blank credit note form. Enter the details just like you would for an invoice, but keep in mind this is for a bad debt. Choose the customer that owes you the money, add a reference if needed, and set the date. It's a good idea to use the date you decided the debt was no longer collectible, as this affects which period the expense falls into. You can also enter a short description in the note or reference fields, such as write-off of unpaid invoice, so it's clear later why this credit note exists. Next, add an item line to the credit note. This line represents the amount you're writing off. If you're matching a specific invoice, make sure the quantity, unit price, and tax settings align with that original invoice so the write-off is accurate. The total of this line should equal the amount you no longer expect to receive. On the account field for this line, select your bad debt account. This is important. Choosing the bad debt account ensures the amount is moved from accounts receivable into an expense, correctly reflecting that this is money you're not going to collect. If you don't see a bad debt account, your chart of accounts may need to be updated by your accountant or bookkeeper before you proceed. Once everything looks correct, review the credit note one more time. Check the customer, date, amounts, tax, and that the bad debt account is selected. When you're confident everything is accurate, click Approve. Approving the credit note will post it to your accounts, reduce the customer's outstanding balance, and record the bad debt expense. That's the full process for writing off bad debts in Xero, from navigating to the sales overview through to approving the credit note that finalizes the write-off.